We are seeing a shift in the electric vehicle market as major North American and European manufacturers pull back their plans. At the same time, China looking to expand their markets, and that includes Canada. Joining us now to discuss is David Mao, VP and Director for Portfolio Research with TD Asset Management. David, great to have you back on the show.
Thanks, Greg. Great to be here.
These are interesting times in the EV industry. Canada now under this deal with China. Are we going to see a flood of Chinese EVs coming into this country?
Yeah, that's a very good question, Greg. And so, as you know, the current Canadian government under Mark Carney has struck a new trade deal with China to allow up to 49,000 Chinese-made EVs into Canada at a very reduced tariff rate of 6% versus the current 100% rate tariff rate on Chinese-made EVs. So, I mean, to answer your question, are we going to see Toronto's streets flooded with BYDs and Geelys? I'm going to say probably not. Because let's put this into context. 49,000 units is the import quota. Canada this year is expected to sell somewhere between 1.9 million and 2 million new vehicles in 2026.
Drop in the bucket.
So it is. So it's, 49,000 is, call it 2% of all new vehicle sales in Canada this year. So it's not a huge number. And to break it down even further, when we say Chinese-made EVs, there are other brands who manufacture in China, electric vehicles in China, that are also would fall under this deal. So think about Tesla. Tesla makes Model 3s in China. They could export Chinese-made Tesla Model 3s into Canada. There are European brands like Volkswagen, Volvo, who also manufacture EVs in China. They would be eligible to export their cars to Canada under this agreement. So it's not all,
So I might even see a Chinese-made EV roll past me in the coming years in Toronto, but it's a Volvo, it's a Tesla. I don't even.
It's
think
a Volkswagen.
I don't even think twice about it.
Yeah, exactly. And just a bit more detail. The more than half of this 49,000 unit quota is for vehicles that are going to be priced less than 35,000 Canadian dollars. So they're going to see some lower end cars come in under this program. We will see some. I believe we will see some of the Chinese brands here, but it's not going to overrun Canadian streets with Chinese EVs. No.
So that's one part of the EV story here in this country. What about Prime Minister Carney? He's been making some other changes to EV rules and incentives. How does that play out?
Yeah. So you're talking about recently there was I guess a conclusion of a review that has been ongoing for the last few months. And what the review is the Canadian, electric vehicle sales target. So under the Trudeau administration, they had set a target of by 2035, all new cars in Canada that are sold in Canada would be electric vehicles. We've seen over the past few years it's just not realistic. That target is not going to be achieved. So what Carney has done is he's rolled back those numbers a little bit. So the new targets now is for 75% of all new cars sold in Canada by 2035 to be electric vehicles. That number is going to go up to 90% by 2040. But what the current government is doing is putting more focus on just reducing overall greenhouse gas emissions, so at the tailpipe basically. So new cars going forward that are sold in Canada going forward are going to need to be more fuel efficient. So that's one way that they're addressing, rolling back those EV sales targets.
So we're not as aggressive in this country anymore on those EV targets. I think we're seeing the same story, probably even more so, south of the border. So now you got a lot of big American automakers, even European ones, really scaling back those plans and taking big charges because of it. How is that playing through the auto industry?
Yeah, I mean, so I think what we've seen over, call it the last year and even the last 6 months, you've had Stellantis come out and announce they're taking about $26 billion of write-downs and impairments on their EV production. I think it was Ford at 20 million, GM at 20 billion, GM I think it was at 8 billion. I might get these numbers a little bit wrong.
Lots of billions.
It's many, many, many billions. And all of these write-downs are coming as a result of all the money that they've spent over the last 5 years building up their EV production capacity. And it's become quite clear that EV sales are falling short of expectations. So these companies now need to write off some of those investments and some of those assets that they've spent money on. So there is a ripple effect through the I guess the automotive industry and the supply chain. You're seeing less demand for batteries, for some of the other components that go into EVs, and people are basically having to kind of reset their expectations.
What's the mix here for that pullback in demand? Is it government policy? Is that the public simply didn't warm to EVs as much as we thought? Because these were ambitious targets from big automakers who you think would know their markets, and suddenly they're saying, we didn't play this one right.
Yeah, so I think it's a little bit of both. Government policy definitely had a lot to do with it, because when we saw those EV rebate credits programs expire both in Europe and in North America, you saw a lot of demand come off. Because $5,000 or $10,000 rebate that you get from buying an EV makes a difference.
Yeah, it could be the thing that tips your decision. In
Exactly,
right?
Exactly. And the good news is, at least for Canada, under this new program, Mark Carney and the Liberals, they are bringing back an EV rebate program for Canadian consumers. So I think over the next this is a program that's going to last about 5 years, starting this year. For anyone buying a fully electric vehicle in Canada, you can get a $5,000 rebate as long as the car is priced under $50,000. And then for hybrids, there's a $2,500 rebate for cars priced under $50,000. So that should probably spur some demand and give people a bit more incentive. I think the other thing, at least Canada is doing, is they've committed a bunch of money. I think it's $1.5 billion to build out the EV infrastructure across Canada. So basically, the government wants to build more charging stations and improve the charging network. So that's going to be another incentive to help people, decide to buy an electric vehicle.
My wife's listening to this interview right now. She's setting a weekend date for me to go start looking at EVs. I know where her head's at. I can tell her, let's wait for the weather to get nice. So as investors, we put all this together. The EV narrative has been challenged over the past couple of years. From an investability perspective, what do we think about this space going forward?
I think going forward, you have to have a very long-term view, right? Obviously, things have not met expectations up until now. People were very optimistic, 5-6 years ago that EVs were going to take over the world, and that hasn't happened. And we already talked about all the losses and write-downs that companies have had to take. So this is a big reset. But I think if you do have to look at this, this investment under, a 10-year lens or a 15-year lens.